Good morning, everybody. Happy Tuesday. It's hard to believe it's almost mid-February already. My name is Jim Codney. I'm National Sales Director here at Western Marketing. I'm super excited. Today we've got not only a new carrier for us, but actually brand new indexed annuities that we're going to talk about. Now, as some of you logged in, you might have noticed that GoToWebinar takes a little while to get in. So I'm going to just put myself on mute for about 20 or 30 seconds just to try and get everybody a chance to get in, but I am going to respect your time. We think we're going to rock and roll through this webinar and get you out of here within roughly about a half an hour or so. So I'll be right back and we'll get going. Now is a great time to grab that cup of coffee or that iced tea that you've been wanting to grab and didn't have time. All right, well, good morning, everybody. For those of you who are just on, my name is Jim Codney. I'm National Sales Director here at Western Marketing. I'm super excited today. First of all, let me tell you that how much we appreciate all of you who are on this webinar. It's not lost on us that when you're sitting and learning about a new carrier partner of ours and a new products that they just launched, by the way, yesterday, that you are now writing apps and putting food on your table and paying your bills. So we really appreciate you jumping on. With that said, we are going to try and respect your time, get you in and out in roughly 30 minutes. One piece of housekeeping before I introduce our guests and we start rocking and rolling through this is if you have questions, we are here for you. Okay, if it was just Pamela and I, we could do this in a Zoom call or something, but we're here for all of you. So if you have questions, please type them in the question box. I assure you we'll look through those, answer anything that's pertinent at the end of the webinar. If we don't get to your question, it's because it's an individualized type of question, so we'll follow up with you at the end of or after the webinar is over. So with that, without further ado, I'd like to introduce the Midwest Regional Sales Manager, Pamela McCluskey. Pamela, welcome.
Good morning, everyone, and thank you for your time and thank you for allowing me this opportunity to introduce not just GBU, but our new FIA product, which we are super excited about. So I'm going to jump right into it. I just want to give you a little idea very quickly on who we are as a carrier. Some of you may not be familiar with us. So GBU is a fraternal benefit society, and some of you may be familiar with fraternals. Thrivent is the big name out there that a lot of folks are familiar of. I'm a previous Thrivent financial planner myself, so I go way back with Thrivent. We are headquartered out of Pittsburgh, PA, and we were founded in 1892. We are a member-owned fraternal insurance company. So we do operate very differently than the common carrier. One of the things I want to point out is our history, because everybody always asks, what does GBU stand for? It used to stand for German Beneficial Union. We were founded by German immigrants. And so that's where the name generated from. But then we absorbed some other fraternals along the way, and World War II happened. So they rechanged the name to Greater Beneficial Union. And that's how we were known for decades, up until until about 5 years or 6 years ago when we rebranded, and we are now just simply GBU Financial Life. GBU Life is a marketing arm. So at least you have a little bit of a story there when a client may ask you, what does GBU stand for? I do want to point out that what makes GBU special, we are fraternal. We are an A- rated fraternal, which is very hard to get as a fraternal, mind you, with AM Best. And we are the 5th largest fraternal company out there. There's about 64 fraternals left, give or take. There used to be a few hundred, so it is shrinking. And I do want to point out that we are not for profit. So we are focused on volunteerism, charitable giving, community service. That's what our members love about us. There's so many wonderful fraternal benefits that they can take advantage of by being a part of our organization, not to mention great products and great rates. Here's our map, just really quickly for those of you who are wondering. We are currently in 45 states, waiting on Washington and Oregon. Not approved there yet. We are not in California, nor will we be anytime soon, and probably never will be in New York. So just a little FYI there. All the other states, we are approved for all of our products, all fixed annuities, all fixed life. Okay. I'm going to jump right into our fixed annuity product. So this is super exciting for us to have an indexed annuity on our shelf. We have some other fixed annuity products in the door, but what we're going to talk about today is the basics on how this process works, the product overview, some of the Barclays index options that we are offering, the product details, and then of course answer any questions. I am going to actually slide through these first ones here because this is reviewing what is a fixed annuity. So I'm sure you all know what a fixed indexed annuity is. So what makes us different from other FIAs? Well, of course, we're coming from a fraternal background. So obviously we're going to look a little bit different than the majority of the FIAs out there because we want to make sure that it fits within who we are as a fraternal. Ours is proprietary to Barclays Agility Shield. So the Barclays Agility Shield will not be found in other FIAs out there. It is going to be unique to just ours. We do have a shorter surrender period than nearly every other FIA out there that we've seen. We have an asset guard FIA that will allow for a 4-year guaranteed lock on par rates and no caps that might limit anyone's earning potential. And there's going to be 19 investment options within the FIA. So really quickly, just an overview. We have a single premium version, which is called the Asset Guard, and a flexible premium version, which is called the Future Flex. Both are on a 4-year repeating surrender with an 8877 surrender charge. Both will accept non-qualified and qualified monies. We can issue this product from age 0 to 95. That's a very big differentiator for GBU, that we go up to age 95 on all of our annuities. Folks really love that. That's hard to find. The minimum initial premium is $25,000 on both, with the Future Flex accepting additional premiums of a minimum of $1,000. We take all contract types. So do know that that is another differentiator. That means all inherited dollars, qualified, non-qualified, spousal, non-spousal, non-person entity owned. So we are very flexible in the ownership of the policy and the monies that we will accept. We're offering 3 Barclays indices along with a fixed bucket in an annual or biennial crediting option. And we also are having booster fee options that will allow for the clients to get higher participation rates. Again, no caps, minimums, or other restrictions. Okay, so let's jump into these options here. So we're going to have 3 main buckets, 19 total, including the fixed account. The Barclays Agility Shield, the Fortune 500, and the US Tech. And as you can see, each one of these will have an annual or biennial option with no booster fee, a 1% booster fee or a 3%. As you can see with the par rates, what does that booster fee mean? I'm paying the booster fee up front to get the higher participation rate at the end, and we will talk about that. They can choose up to 7 strategies, so they'll have the opportunity to choose up to 7 of these, including the fixed bucket. So let's talk a little bit about those index options. So the Barclays Agility Shield is proprietary to GBU and is designed to provide exposure to a combination of equity, commodity, and treasury assets. It's got a 7% volatility target that is applied daily to the control risk. So the index is going to align really nicely with GBU's philosophy and is a blend of already existing Barclays indices, as you can see listed here. So this is going to be a very nice portfolio for someone to choose. Here's an example of how it might allocate with maximum exposure in any one area being 225%. So they use that volatility control to maintain that 7% target. And the next one is the Fortune 500, which has about a 12% volatility. And so this index is going to increase or decrease its exposure to the stocks corresponding with the Fortune 500 list. So that's going to be between 0 and 125% to try to maintain that volatility at a constant 12% annualized level. Again, this is just, I know it might be a little small on your end, but the historical exposure chart is just illustrating how that index increases or decreases, keeping it at about that 12% volatility. So this is another really nice option for them to choose from, again, aligning with GBU's philosophy as a fraternal and how we manage our funds. US Tech is the third bucket, seeking to capture returns of the largest non-financial stock on the NASDAQ. This is the single building block with Invesco QQQ. Again, trying to maintain that 12% volatility and using Barclays proprietary intraday volatility forecasting is really going to utilize that. All of this information, mind you, is available on the Barclays website with their fact sheets, their portfolio breakdown. So if you wanted to dive a little deeper, certainly you can take a look at those. I'll show those in a moment. This is just a quick comparison chart of the 3 buckets. So the Agility Shield Index, Fortune 500, US Tech. As you can see, the volatility targets, its exposure. As I mentioned, the AGI is the only one proprietary to GBU. And then, of course, their ticker symbols. And you can go straight to the Barclays site and look up that information. Those are right here. So these are the fact sheets that will be listed on the Barclays website, which will allow you to take a deeper dive into those funds should you choose to do so. Okay, I just wanted to point those out. Very helpful and useful to see how it's been trending. Okay, so jumping into the product details, we're going to use the point-to-point crediting method. As most of you are familiar with, it's going to take the snapshot from the index performance on the first day to the last day of the index term, which again can be annual or biennial based on their choice. And then the difference between the first day and the last day is going to determine that index performance, and then the index performance and the par rates is used to determine the earnings. I just have a few examples of what that might look like if a person had a 0.64 increase with a par rate of 50. And as you can see, the multiplier equals the interest credited. So we just gave a few examples of what it might look like for a moderate return to a higher return, an even higher return to nothing. What if it didn't do anything? Then no interest would be credited. The account value would not move. But let's talk about booster fees, because that's giving them an opportunity to get a higher participation rate. And that, of course, might change the account balance. So the booster fees are the 1%, 3% option in either annual or biennial, where it will allow them to have a higher participation rate. So we will actually deduct that fee of 1% or 3% from the amount going into that index strategy at the beginning of the index term. For any crediting option that has a booster fee, we deduct it at the beginning, and then whatever is added to the account gets added on the anniversary. And then if they stay in that index strategy choice, it will be deducted again going into the next year. If it's annual, if it's biennial, the crediting happens at the end of the first 2 years, right? So depending on what choice they're in. Again, if there's a negative year, or the interest earned is less than the fee, the account's value could be less than the original premium that they put in that bucket. So that is something to remember, that they're still going to pay the fee, be it annual, for 1% or 3%, even if the index strategy does not earn at the end of the year. So here's an example of that. So this example is showing someone putting in 100,000 into the asset guard, which is the single premium version. They are in a 3% booster fee, and they have chosen a 1% annual booster fee, a no booster fee, and then they put a little bit into the fixed bucket. So here's their starting values, because the 3% was deducted and the 1% was deducted. Here is their participation rate, and here's what the index performed. That is what the interest was credited on the anniversary. And as you can see, for $1,200 fee at the beginning of the year, they had a return of over $10,000 altogether. So it just gives you a little bit of an example of what that might look like should they choose multiple indexes. For premiums in, you have the asset guard, which is the single premium, and the future flex, which is the flexible premium. Both require $25,000 minimum to get in. The single premium does not take new monies during the first 4 years. The future flex will take additional premiums of at least $1,000 as many times as they want to deposit. The maximum annual premium is $5 million without prior approval. Total contract years, 10 million without prior approval. So the future flex accepts ongoing premiums. All of those ongoing premiums will go into the fixed interest rate account if it is an off anniversary. And then on the anniversary, it will be swept into the appropriate allocations per the instructions. If there are no instructions given, we will simply allocate how the initial deposit was allocated. The annual strategies for each contract anniversary can be changed each anniversary, right? So they can submit a reallocation form should they decide to move strategies on each anniversary. And at the end of the 4-year period, there will be a 45-day liquidity window that will open up, allowing them to do whatever they want to do. So the par rate and the interest rate guarantees between the future flex and the asset guard. The future flex, the one that's ongoing premiums, par rate is going to be guaranteed for if they're in an annual, the first year, if they're in biennial, for the first 2 years. After that, it could change. Interest rate is the same. It's guaranteed for the first year and may change after the first year. The single premium version is guaranteed on both par rate and interest rate for all 4 years. So par rates and interest rates are not banded by policy size. Par rates will never go below 20%, and the interest rate on the declared interest rate account may never be less than half. The interest earned in the fixed bucket is going to work like all of our other fixed annuities, which is daily compounding. We will have a par rate lock procedure, just as we currently do with an interest rate lock procedure. We review our interest rates and now par rates on a weekly basis. So if we are going to make any change, it is going to be announced by the end of the week to the field, allowing them an opportunity to lock it in should they have a case pending or getting ready to write. So all changes that get announced are typically going to be for the following Monday. We have a 3 business day lock period. So if the change occurs on a Monday, you've got to the end of the day on Wednesday to get that app in and have it in good order to lock the higher par rate and or interest rate. And then, of course, cash to follow within 7, but 45 allowed for transfer and 1035 exchange. I did briefly mention the reallocation. So the reallocation of the indices can happen on the first day of the anniversary. You will have information available to you through Barclays all throughout that indexing year, contract year, to determine if the indice is performing or not, to enable the client to prepare on whether or not they choose to reallocate. If they don't do anything, everything stays the same. If they choose to reallocate, they can submit a reallocation form at any time, but it won't be reallocated until the anniversary. They can go from an annual to a biennial or vice versa, but you just need to remember this is only a 4-year product. So if the funds can only be reallocated into or out of a biennial, you got to look at the even contract anniversaries. And with that reallocation form, if they're going to submit it towards the end of the period, we need to receive it no later than 5 business days before that anniversary date hits, just so that we have the opportunity to get in the system and do what we need to do. When funds are received for additional deposits, as I mentioned, it goes into the fixed interest rate account until that first day of that index term, and then that's when it's going to go to the appropriate index strategies. Again, with either the allocation form, if not, it's going to go to how it was originally done on the initial deposit. Withdrawals, I do want to mention that this is another feature that makes GBU a little bit more unique with both the single premium as well as the future flex. In all contract years, including the first year, starting after the first 30 days, free withdrawals, each contract year is 10% of the account value. If no withdrawal is taken in any given year, then it rolls up to 20% max. Once they take, it goes back to 10 the next year. That withdrawal will be taken from the fixed interest rate account and then proportionally allocated across the investment options unless the owner specifically requests those to be taken from a specific index strategy. For qualified money, I do want to mention that our annuities are RMD friendly, and that includes the fixed indexed annuity products. On all of our annuities, we do have a living benefit rider automatically added. This is nothing that they have to apply for or box to check. It's automatic. This is really a liquidity option. If your client goes into an ADL situation after the first contract year, be it critical, chronic, or forced terminal, they do have the opportunity to do the appropriate paperwork and submit for a one-time penalty-free withdrawal of up to 100% of their monies. So that is a nice feature to have on there. Surrender charges, as I mentioned, this is a rolling 4, so it's 8877. Surrender charges, of course, are waived in the event of death of the owner. The repeating surrender charge pattern is going to begin after the 45-day window. So first 4 years, they have their 45-day window. If they do nothing, it'll automatically roll to another 4 years. During that 45-day window, they do have the choice of doing whatever they want during that time. And this product, unlike our MYGA product, no market value adjustment applies. So let's talk about that 45-day window. with this product, they cannot annuitize during the first 4-year surrender. I do want to make that clear because that is a differentiator to our other annuities where they could in fact annuitize after the first year. This one, they cannot in the first 4-year surrender period. Once that 45-day window opens, they can continue their contract. They can apply it, let it go to the new 4-year surrender. They can add new premiums. They can make a partial surrender without any surrender charges and let the rest roll to a new 4-year surrender charge period, or they can take it all out, or they can, of course, annuitize. So if the owner doesn't do anything, like I said, it's going to automatically roll into another 4-year period. We do allow for all annuitization options, and here is a list of all of those options. So we are good with annuitization, so I'll pass through that. Okay, overview really quick. We talked about this being a very simple and easy to understand product. Again, we're fraternal. We want to keep it simple. This is a single premium version or a flexible premium version. We've got the Barclays Agility Shield proprietary to GBU, as well as the Fortune 500 in US Tech. This is a very nice short 4-year chassis. The single premium asset guard version allows you to lock in a 4-year guaranteed par rate. We have the 1% and the 3% booster fee available for additional earning potential, no caps that might limit those earning potentials. And of course, that really nice liquidity provision, which is the same as our MYGA and Future Flex annuities. The living benefit rider built in. We do everything on iPipeline. It is all electronic. There is no paper app available with our FIA because of the complexity of the product. And as a reminder, we do pay commissions daily. Okay, so that is the FIA. I did show you the product indices, fact finders that are available here through Barclays. And then I just want to show you one last screen, which is our support site. We have an entire area dedicated to the fixed index, so all the support you need is available. We have all the marketing materials that you'll need, rate sheets, product sheets, brochures, GBU supplies, all of that to you at no cost, of course. We have a great training video and presentation as a reminder. Then we have the links to the Barclays website for the index information. We have a wonderful FAQ. This is a great sheet that I, of course, will make sure if anyone needs it, we can get it to you. We have training available through our website. And again, application is done through iPipeline. Okay, so I'm just going to open it up for any questions. That's pretty much it on my end. So I'll kind of let Jim, you want to take over?
All right.
I'll mute myself.
Yeah. Hi, Pamela. Thank you. So we had there's a question about commissions, guys. Call our team. We don't talk commissions on any webinars. So feel free to give us a call at 800-852-7152. Again, 800-852-7152. And we're happy to talk to you. Sometimes you're in different situations, have agencies, etc. So just ask for somebody on the life and annuity team. Will be happy to discuss commissions. Pamela, thank you first of all for that. I'm being asked, where are the niches, for lack of a better term, on this product. And I see real low-hanging fruit in a couple different areas, folks. Don't get me wrong, there are going to be some other opportunities as well, but older ages. As Pamela said, this is available to 95. A lot of our carriers stop at 80 or 85. So because it's a 4-year surrender, they can extend this out to an older population. So when you run into that, the other thing is, frankly, you might run into some people that, want a shorter term solution. Not every client we have out there is going to want a 10-year surrender product, right? Whether they believe that with the new presidential election cycle, the economy is going to stabilize or something else may happen, and the economy is going to change, and they don't want to lock their money up for 10 or 12 or 14 years. This is a great product for you to think about at least offering to them. As you see, it's available 0 to 95, up to $5 million on the flex initially with the home office approval, and the single premium up to $10 million, all on a 4-year surrender charge. Pamela, there's a question, and I think the answer is yes, but I've got a question about what state it's available in, and the specific state in question is New Jersey. I believe it's available there, but can you confirm?
Yes, this product is available in all of the states that I went through on this screen. Every state that is dark blue, Washington and Oregon are the only two we're not approved in yet. No California, not anytime soon, probably never in New York. So all the other states are good to sell all of these products in.
Perfect. Thank you. And for those of you who are either newer to this stuff or maybe even newer in the industry, California and New York are a little unique. We'll just say with some of their requirements for carriers to offer products there. But that's a really good footprint, especially as they expand into Washington and Oregon. Pamela, I had another question. Somebody is asking if the client does not move the annuity during the 45-day window, so it re-ups for another 4 years, do you pay the agent commission, whether full or at a reduced scale, for them if it's locked up another 4 years?
So yes, without getting into the commission breakdown, yes, we actually will pay renewal. Should they go into another 4-year, we will pay for additional deposits as well in the first 3 years. We do not pay additional deposits in year 4, because in year 4 we are going to end up paying a renewal, assuming they're going to renew into another 4 years, if that makes sense. So yes, there's also a trail option available on this product as well, if that's a preference.
Makes total sense to me. So Barbara's asking about historical performance. Barbara, this was just launched yesterday. So to be honest, it's brand new. It's like a new baby boy, for lack of a better term. We're really excited about. Now, as you can see, Pamela is pulling up some information on the indices themselves. But as far as the actual product, it's brand new. So you can see on your screen right now, returns from 05 all the way up to current time. Thank you, Pamela, for pulling that up. But so they do have those, so you can at least look at the historical performance of the indices used. But as far as the actual annuity, it's brand spanking new. That's why we're doing it today, to get it out there to y'all, because we think it'll be beneficial for those of you who are looking at this. One other thing I want to say is, I know some of you on the call, because I work with some of you directly, I know some of you are not annuity primarily agents, meaning you sell some health products and you may run into some annuity cases. Outside of a MIGA, this is probably the easiest annuity that I could get you to talk about. So if you're looking to dip your toes in the water and start doing some annuities, you've thought about MIGAs because they're simple. This isn't that far-fetched from a MIGA. It's just short-term. You can do some guaranteed options. They've got some volatility controls. So, myself and our life and annuity team are happy to help you as you run into clients, want some illustrations, have questions on this or any of our other products. So it looks like we're through our questions. So if you have more questions, you want to get contracted, please call 800-852-7152. Again, 800-852-7152. You can either ask for me. My name again is Jim Codney, or you can ask for anybody on our life and annuity team. We'd be happy to help you out, get you brought on board. This webinar was recorded, so we will have access to send it out to you. We will also host it on our Western Marketing YouTube page. So with that, thank you very much, everybody. Make it a great day, and we'll talk to you soon.